Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. We're going to take a look at one out of the utility sector. Again, this is Brookfield Renewable Partners, formerly Brookfield Renewable Energy, again out of the utility sector. This is the vested interest stock screener. This is the criteria we will be looking at in this video today. This is a screener I use to find companies I am more interested in doing a deep dive. There are thousands of companies out there, so I run some through this screener. If it meets 5 of 8, makes it onto my watch list. 6 of 9, if it was a company out of the financial sector, makes it onto my watch list. Then I do more of a deep dive into the financials, looking at their balance sheet, their income statement. Then I do a discounted cash flow analysis on the company, figure out a range price I'm willing to pay for the company, and then possibly add it in the future if I'm adding a new position to the portfolio. Sometimes I also do this screener on companies that I already have in my portfolio as a back check to see if it's meeting the initial screener criteria that I set up. If it doesn't, then I also do more of a deep dive into the financials, make sure it's still meeting the initial criteria that I set up when I invested in the company. Again, just an initial screener, doesn't mean it's a buy or a sell if it makes it onto my watch list. And even if it is a buy or a sell for me, doesn't necessarily mean it should be a buy or a sell for you. All right, back to Brookfield Partners. www.brookfield.com is their homepage where I pull this information from. Again, www.brookfield.com. You can go there and find more information about the company if you are interested in them. Our asset management business takes a long-term, value-oriented approach to investing, focusing on assets across infrastructure, real estate, renewable power, private equity, and credit. We combined our deep operational expertise with disciplined capital deployment to drive performance from the inside out. And that's really what they are. They're an asset management company, but they focus on infrastructure projects, renewable power and transition, real estate, private equity, and then provide credit to some companies out there as well. And you can go to their homepage and click on each one of these and see some of the projects that they have in infrastructure or renewable power, real estate, private equity, or some of the companies that they are providing credit to. Again, www.brookfield.com is their homepage. Now, the reason we're taking a look at them, down 3.38% on the day. We are talking about Brookfield Renewable Partners, again, formerly known as Brookfield Renewable Energy, ticker BEP, out of the utility sector. Closed out the day at $26.86. 52-week range as low as $19.29, as high as $29.56. They are not quite within 15% of a 52-week low, need to drop a little bit further. Market cap of $16.742 billion. Beta of 1.02, so they are more volatile than the overall market, just slightly. Price earnings ratio was not listed. Earnings per share growth is negative at negative 0.96, so negative 96 cents per share. Earnings date coming up November 5th, so next month. Forward dividend, $1.49 with a very nice starting dividend yield of 5.37. They are a quarterly payer, so divide by 4 or wait. We'll see that here towards the end of the video. Ex-dividend date, August 29th. We are past that. Looks like they paid out September 29th. So you would be in line for the next dividend, but you're going to have to wait a couple months to get it. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $29.84. So they do see some potential upside from where it currently sits, setting a new 52-week high. Not a ton, but there is some potential upside there. Now, I like to look at dividend yield theory to see if a company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 4.56%, compare it to the current 5.37, over here forward 5.37, same number. Since it is higher than their 5-year average, that speaks to undervaluation. These numbers are inversely correlated. That means they're the opposite. If it's higher than their 5-year average, undervalued. If it's lower, overvalued. In this case, at least according to dividend yield theory, this one is potentially undervalued. Now, payout ratio is very high, 649.02%. That is extremely high. You might want to watch that. Now, companies like this, asset management companies, probably issuing some stocks, doing some other things to that payout, to juice up that payout ratio, right? So not sure that this is a great company to utilize that, but that is much higher than the 75% or lower that I like for companies typically. Now, jumping down to free cash flow, I want growing free cash flows because companies can do some things with that. They can hold it on their balance sheet as cash or cash equivalents, pay off debt, make acquisitions, reinvest back into the company, pay a dividend, which this company does, raise that dividend over time, or even repurchase shares. And we want a company to be able to do all of those things. Going back in time to December 2021, negative $1.2 billion, 2022 actually up, even though it's still negative, negative $47.9 million. Or $479 million, I mean. December 2023, negative $944 million. 2024, negative $2.4 billion. Trailing 12 months, negative 3.6 billion. So really up and down all over the place. They are pulling some shares out of the market. 2021, 153 million, 2022, 252 million, 2023, 43 million, 2024, 182 million, and the trailing 12 months looks like they're continuing that trend, though we don't know how much of the trailing 12 months is still 2024 numbers. 33 million, though, looks like they are still continuing that trend. Now, jumping over here to stockanalysis.com, this is another source I go to for information, not affiliated with stockanalysis.com or Yahoo Finance, just two of the sources I go to, and I do recommend two, if not three sources for you, so you can make sure the information you are looking at is accurate and up to date. Any sources that you want, you don't have to use the ones that I like. These are just the two that I choose. Now, they do have 8 analysts that have taken a look at this. They do call it a consensus buy. Low estimate of $27. It currently sits lower than the lowest estimate. So if it came back up to that 27, that would represent a 0.78% increase from where it currently sits. Average estimate of $31.13. That would represent a potential 16.2% increase. And if it happened to hit their high of $44, that would represent a potential 64.24% increase. And you could collect that 5+% dividend yield along the way. Now, statistics, I like to look at return on capital employed and EPS, earnings per share growth, as two of the initial metrics. And I like 10% or better for return on capital employed there at 1.33%. Very low, much lower than what I like. EPS growth was not listed, so can't really look at that. Quarterly pay, as we mentioned, payout ratio, they didn't list it, but again, what we saw with Yahoo Finance was way, way high, very, very elevated. I want to really keep an eye on that. Dividend growth of 5.1%, growth of 10 years. Buyback yield is positive at 0.19%. That means they are pulling more shares out of the market than they're issuing. Shareholder yield is positive at 5.6%. They do pay out like most companies on the March, June, September, December timeframe. Going back to February 2023, they were paying 33 cents and some fractions of a penny. Raised that up February 2024 to 35 cents and some fractions of a penny. Raised that up again February 2025 up to 37 cents and some fractions of a penny. And I would anticipate they are going to have their next raise February of 2026 if they maintain that dividend growth. All right, let's run this one through the screener and wrap this one up. Understand the business. Yes, they're a management company that has their hands in a couple different pots, almost like a REIT in their real estate. Utilities, obviously, they do almost like a BDC where they're loaning out some money. So they are, again, an asset management company, but they don't just have their hand in utilities, even though they are out of the utility sector. Growing free cash flow, no. Bit up and down, so no check there. Growing dividend, yes. Going to give them a check there, even though if their payout ratio really is in the 600% range, should they be growing that dividend? That seems very, very elevated. Dividend payout ratio under 75%, no. It's extremely elevated. Dividend yield theory says they're potentially undervalued, so check there. It is not within 15% of a 52-week low, no check there. Return on capital employed was not close to 10%, only around 1%. A little over that. Earnings per share growth was not listed, no check there. 3 out of 8, does not make it onto my watch list. Let me know what you think of Brookfield partners there. Is it one in your portfolio? Is it one maybe you were selling today? Maybe you're part of that downturn. Are you a hold on this one? What do you think of the company overall? Would love to hear from you in the comment section down below. All right, that's really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click all those buttons down below. Share with anyone you think that might find value in the content. And drop a comment. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. If you have a company like Brookfield Partners you'd like me to cover in the stock pick, Brookfield Renewable Partners you'd like me to cover in the stock pick of the day series, drop in the comments. I'll work it in the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. I hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest for educational and entertainment purposes. Investing involves risk. Canada's money should never invest any amount. You're not comfortable using. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.